Over the past year, billion-dollar investment firms have been quietly acquiring homes, not casinos or hotels, but the places where ordinary families like you and I live. Reports show that over 150 single-family homes across the Las Vegas Valley were bought in bulk by a Wall Street-backed firm. That's not an isolated deal. It's part of a growing trend where hedge funds, real estate giants, and private equity firms are turning America's favorite playground into their personal monopoly board. So what could this mean for Vegas residents when Wall Street moves in? Since 2008, institutional investors, similar to the big money players that reshaped Wall Street after the financial crisis, have been quietly purchasing homes across the Sunbelt Las Vegas. With its fast growth, lower housing costs, and limited regulations, became one of their favorite playgrounds. In 2024, one Wall Street firm from Greenwich, Connecticut, Starwood Property Trust, swept through the Las Vegas Valley, buying up the very fabric of local neighborhoods. In just October alone, they purchased 151 single-family homes across 3 separate deals, spending $58.2 million on properties in North Las Vegas, Henderson, and the Southwest and Northwest Valleys. And they're not alone. Progress Residential, owned by the New York hedge fund Pretium Partners, is now the largest single-family homeowner in all of Clark County, with more than 3,100 houses as of 2025. Right behind them is Invitation Homes, a Dallas-based real estate giant, a REIT that owns roughly 3,400 rental homes in the Las Vegas Valley. That's the same Invitation Homes that manages over 85,000 homes nationwide. Then there's American Homes for Rent, another public landlord with about 2,000 properties. And back in the mix, Starwood Property Trust is again flipping entire portfolios of Vegas houses in multi-million-dollar bulk deals. Together, these corporate landlords now control between 15% and 25% of all single-family homes in southern Nevada. This isn't a local landlord buying a duplex. This is a $6.4 billion Wall Street machine, buying up the American dream 1-3-bedroom ranch house at a time and turning it into a rental unit. That means roughly 1 in every 4 houses could be owned by Wall Street-backed investors. Homes that families once dreamed of owning are now quiet profit centers for corporate landlords, and they are not spending little money. Before we continue, please subscribe to this channel to get updates on every Las Vegas video we post. Big money gets involved. Unlike a regular buyer who tours listings and negotiates one house at a time, these firms buy entire neighborhoods in one go. In July 2023, Invitation Homes purchased 264 homes from Starwood for approximately $98 million, which averages nearly $400,000 per home. Then, in October 2024, Starwood turned around and purchased 151 additional homes for an extra $58 million. These aren't small-time flips. These are bulk portfolio trades, executed across spreadsheets and legal teams, often closing hundreds of deals on the same day. And here's the wild part. Some of these homes were once foreclosures, snapped up at low prices during the 2008 crash. Now, they're part of massive corporate rental portfolios, the kind that never hits the open market for local buyers. If you look closely at a map of Las Vegas, you can clearly see where investors have made their presence felt. In North Las Vegas, approximately 1/4 of single-family homes are now owned by investors. It is one of the most affordable areas in the valley, making it prime real estate for bulk buyers seeking quick returns. Within Las Vegas city limits, investors control about 15% of homes. In Henderson and in the southwest and northwest suburbs, major landlords such as American Homes for Rent and Progress Residential own hundreds more homes. Locals mention streets where nearly every other house is a rental owned by the same company. One resident said it's strange. You don't even know your landlord's name anymore. You pay rent to a company website. Take the story of Melissa, a school counselor who's lived in the Vegas Valley for 12 years. In early 2024, she found her dream starter home, a 3-bedroom house with a small yard and a great school district. She put in an offer over the asking price and lost the bid. The winning bid? An out-of-state investment firm, operating with all cash and no inspection, closed in 5 days. She said, "It felt like I was playing Monopoly with people who already own the board." Then there's David and Carla, both nurses at a local hospital. They'd saved for years, hoping to buy near North Las Vegas to be closer to work. However, each time they found a listing, investors would swoop in first.
Well, owning a home is the American dream, but right now, half of Clark County residents say they can't afford to buy. From soaring interest rates to private investors outbidding local families.
By mid-2024, they gave up and are now renting from one of the very same companies that outbid them. Their rent, nearly $600 more per month than what a mortgage would have been on that same house. This isn't just a few unlucky families. It's a market-wide shift. In Q3 2024, investors spent over $1 billion buying homes across the Las Vegas Valley, up nearly 28% from the previous quarter. That surge made Vegas the #1 metro in America for investor home buying that year. Overall, investors accounted for approximately 23% of all home sales during that period, nearly 1 in 4 homes. Now imagine what that means for everyday buyers. When a hedge fund can drop $10 million cash on 30 homes, local teachers and nurses never even get a chance to bid.
Simply out of reach for most of the jobs in this town, and that's a serious problem that needs to be addressed for the long-term growth of.
Experts say this is pushing prices up across the board. Homes that used to sell in the mid $300,000 are now being priced in the high $400,000. Renters, meanwhile, are seeing monthly hikes of hundreds of dollars as corporations target higher income tenants. So why is this happening? Simple housing has become one of the safest and most profitable investments in America. After the 2008 crash, big investors realized single-family homes could generate reliable rental income. Add in rising home prices and tax advantages, and you've got a nearly foolproof asset class. Firms like Progress Residential and Invitation Homes don't just buy houses, they package them into investment products. Each home becomes a tiny slice of a larger financial instrument. That's what economists refer to as the financialization of the housing market. Homes stop being places to live. They become numbers on a spreadsheet, traded and securitized, just like stocks. And when thousands of homes are owned this way, communities start to feel the ripple effects. Less home ownership, more transients, and higher rents that feed back into investor profits. Effects on Nevada. By now, this issue has had a significant impact on the Nevada legislature. In 2025, lawmakers introduced Senate Bill 391, which would require large landlords to register their holdings and cap corporate purchases at 100 homes per year. A similar bill in 2023 tried to set a 1,000 home cap, but was vetoed.
It's frustrating.
This man, who doesn't want to share his name, says he's struggling to make ends meet.
I look at some of the people down in my neighborhood that had apartments, right, man, just living on the street.
Another proposal, AB 457, targets tax loopholes that allow corporate owners to hide behind Shell LLCs. State senators like Dinah Neal have been outspoken. She said, workers want to translate their earnings into a mortgage, but they're not actually able to do that in this current market. At the federal level, Representative Susie Lee has pushed for greater transparency in foreclosure sales, calling on regulators to disclose the number of homes being acquired by investors instead of families.
You wouldn't even know it, but this whole entire street is owned by a corporate investor. They built the houses.
And Representative Stephen Horsford has reintroduced the Home Act, targeting rent gouging and predatory fees by large landlords, especially after federal investigations found companies like Invitation Homes charging deceptive rental fees. Even after the FTC got involved in 2024, Invitation Homes paid a $48 million settlement over those deceptive charges. For families in Southern Nevada, this isn't an abstract economic story. It's a daily reality. The median home price continues to climb, and for many, the dream of homeownership is slipping away. Younger buyers are being priced out entirely, forced to rent longer. And that rental market, it's dominated by the same corporate players who now have the leverage to raise rents at will. Residents describe feeling powerless. You can't negotiate with a landlord who's just a website. You can't call to ask for a repair and reach a person who lives in your community. One tenant shared that her corporate landlord charged $75 to process her rent payment online, and another $150 if it was late by a single day. It's the kind of nickel and dime system that makes renters feel like algorithms, not people, are running their homes. Economists warn this is only the beginning. If trends continue, corporate owners could control nearly 40% of U.S. homes by 2030. That means nearly half the single-family homes in America could belong not to families, but to funds, firms, and shareholders. In Vegas, where local wages can't keep up with investor-backed cash offers, this could deepen the divide between those who own and those who never will. Affordable starter homes, once the foundation of middle-class stability, are becoming rarer every month. And if Wall Street continues to treat housing like the next big stock market, the risk is clear. We turn neighborhoods into portfolios and communities into commodities. Community groups in Las Vegas are organizing for transparency. Nonprofits are mapping investor-owned properties to illustrate the widespread nature of the issue. Some builders are pivoting, creating programs that prioritize local buyers before homes hit the open market. Residents are speaking out at city meetings, online, and even in congressional hearings, demanding that homes stay in the hands of people who actually live in them. There's a growing belief that housing should not be just an asset class. It should be a right, a cornerstone of stability, belonging, and community. But the wolves of Wall Street do not care. The ripple effect. Las Vegas has always been a city of extremes, a place where risk and reward, glitz and grit coexist. But what's happening now cuts deeper than any jackpot or losing streak. It's about who gets to put down roots. It's about whether the American dream of homeownership is still absolute or just another line item on Wall Street's balance sheet. When corporations outcompete families like Melissa's and David's, we all lose something bigger, the sense that hard work and saving matter. And if that dream dies in Las Vegas, the city that once symbolized possibility, what does that mean for the rest of America? So here's the bottom line. What's happening in Vegas is a reflection of what's happening nationwide. From Phoenix to Atlanta to Tampa, corporations are buying thousands of homes, packaging them into rental portfolios, and selling shares of those portfolios to investors. Housing is no longer just about shelter. It's about yield. But here's the uncomfortable truth. As long as it's profitable, it won't stop. The only thing that could slow it down is public pressure, local policy, or new housing supply that evens the playing field. Currently, supply is tight. In the Las Vegas Valley, Wall Street isn't just investing in homes. It's reshaping lives, neighborhoods, and the meaning of ownership itself. This isn't some distant Wall Street experiment. It's happening on quiet cul-de-sacs, behind stucco walls, in houses where kids should be playing in the backyard, not priced out by a spreadsheet in New York. The question now isn't whether corporate investors will continue to buy it, but whether we'll let them turn every dream home into another asset. Because at the end of the day, housing shouldn't be a gamble. It should be a guarantee. Share this with someone who's trying to buy a home. Click here to check out another video, and make sure to subscribe to my channel.